Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I figured now would be an excellent opportunity to talk to you guys about taking profits. This is one of the questions I oftentimes get, especially with the market being so parabolic right now. How do I know when to take profits? What do I do with those profits? And how do I use indicators and different resources using technical analysis to stay profitable and continue taking profits at the right time? So for today's video, I'm going to be teaching you guys my exact strategies for how I trade market cycles, how I invest into market cycles, and the different technical indicators that I use when it comes to taking profits. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any new videos like the one provided for you here. And make sure you guys check out my Discord server of over 20,000 members and growing. It's free to sign up. Links are going to be provided for you in the description to join. With that being said, I also have a free ebook that's also linked into the description as well. Make sure you guys go check that out. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so here we are taking a look at Bitcoin. A lot of people have asked me, how do I go about taking profits inside of this market? And I don't really hear a lot of people talking about that. Right now, it's only about profit, 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 market only go up, number go up, and all of this stuff. But it's really important that we understand how to actually take profits, because there are certain points in times where it is a great time to take profits, where if we don't take profits, oftentimes the trade ends up going all the way back down and we end up losing out on a lot of money. And so people are always asking me, I know that you hold long term, so how do you actually take profits? What are you doing? So for today's video, I figured it was an excellent opportunity to actually break down how and what I look for and the ways that I go about doing it. So let's start off this video by talking about a couple basic things. Now, when it comes for me taking trades, when it comes to understanding how I take profits, it's important to understand how I take a trade and what I'm looking for inside of a trade. Now, this is something I just talked about in my recent video, and the reason and the way that I actually look for trades is through market cycles. Market cycles are going to be some of the most repetitive patterns that you see inside of crypto. It's really simple to find, and once you do find them, it actually sets you up for a lot of success because of the fact so many of these cryptos do it. And oftentimes you can find low market cap coins that'll do this exact same pattern right before a massive 10x, 20x explosion. And this is a really big way of which I've made a lot of my profits as of recently. So I just want to talk to you guys about what I'm looking for. And first and foremost, this is what I'm looking for. Roughly this pattern. And obviously the pattern can look a little bit different, which we will get into. But more often than not, you guys are going to see this exact pattern being repeated over time many, many times over. And so all we have to do is be paying attention for this, understand what a market cycle is, and once we understand what a market cycle is, we can start then understanding what we need to do to take profits. And so this is going to be one of the first things I look for. Now, if you guys didn't watch my last video, go watch that because it breaks down how I trade market cycles. I'm not going to get into a ton of analysis with this, but more or less, this is the pattern that I'm watching for. Now, to further with this was another chart that I covered. This is another thing that I'm looking for. Now, this one shows the emotional psychology of a market cycle, because it's humans' emotions that dictate where the prices go, right? Humans are investing their money. They're emotionally attached to the outcome of that money, win or lose. And because of that, that's the reason the markets move. So this just pretty much maps out the human emotion and the psychology. This one actually maps out the valuation of a market cycle. And so I use these two different graphs to kind of dictate how I take trades and knowing where we're at in a cycle, most importantly. And so the point of buying inside of a market cycle is you want to be accumulating when everybody's angry, depressed, anxiety, all of these things. That's when you want to be accumulating, is right when the market cycle is at the lowest point, because that's where the peak point of financial opportunity comes. We can see the peak. This is the peak point of financial risk as the market's price is at the highest. As the market's price is at the lowest, this is the peak point of financial opportunity. Remember that. You don't want to be stuck on the opposite side, buying when prices are going up and selling when prices are going down, because that's psychologically how you lose money. Now, one other thing I want to talk to you guys about that is very important when it comes to me taking profits. This is a little infographic that I wanted to share with you guys because I don't think a lot of people even realize how much money has been printed in the last year. 35% of all US dollars in existence have been printed in the last 10 months. And I actually think that this number has climbed because of the recent stimulus that just got passed. What this shows is that there has been a monumental amount of US dollars that are being created, and it's at an exponential growth point at this point. Just printing money, creating new stimulus, and this is not good for the US dollar. And really, guys, it's not even that good for crypto as a whole. Yes, the numbers are going to keep going up on the screen. Yes, the market cycle is going to go very parabolic. But the problem with this is it's not real translatable wealth gain. This is merely just the amount of money that they're printing inside of a deflationary market and a capped supply like Bitcoin and all these other cryptos. The more dollars you print, the price is simply just going to keep going up, and that's the way it works. You look at what happened with the stock market. Every time we get a dip, they just print more money, and it just keeps going up. And so it's this illusion that the markets are actually going up, when in actuality, most of what we're seeing is a translation based off of inflation. Yes, there are going to be cryptos that outperform the rate of inflation, but more often than not, what we're seeing here is a reflection of just the amount of dollars that are printed. And so this is a factor that goes into my planning when it actually comes to me taking profits and knowing when a right time to take profits is. Because as of right now, I haven't really taken any profits on a lot of stuff because I expect that we're going to be seeing a lot bigger of an increase due to how much money has been printed. And so this is also a little infographic that I keep in mind when it comes for me taking trades. Now, with all that being said, let's actually dive into some charts and I will explain to you guys what I look for when taking a trade, how I manage the trade, and what I do with the profits once I've taken the trade and taken profits. So first things first, guys, I want to talk to you guys about Bitcoin because Bitcoin was one of those key examples where a market just kind of fooled everybody. And this is just the way that market cycles work. Now, this was the original bear market inside of Bitcoin, right? Lower lows, lower highs. We consolidated in this descending triangle before selling to 3,200. And I remember it was at the very bottom of the cycle when I was making videos talking about telling people that it was the bottom. And I remember going back to this time and a lot of people were wondering, what happens to Bitcoin next? And most every single person thought that Bitcoin, including me, thought the Bitcoin was going to come up, it was going to hit this resistance level, it was going to kind of come back down, and it was going to take so long of this accumulation before we ever were going to break out of this 6K resistance. And in fact, the opposite was true. We just broke out of that with no hesitation, and a lot of people were left on the sidelines. A lot of people sold too early, and a lot of people actually missed out on this amazing opportunity. Now, because of that, people usually sold too early or they sold the bottom, and then when they saw it swing up, they ended up taking positions. This is just going with the emotional psychology of a market cycle, right? You don't want to be FOMO buying as the market's going up because that's the peak point of financial risk. And so with Bitcoin, we saw a lot of that. Now, one of the ways in which you would look to take profits inside of a market cycle, I like to hold the long-term trend. But in this case, Bitcoin went all the way up to 14K and then we went all the way back down to 38. And so this was a very volatile time. It's in the early points of the market cycles where you're going to see ups and downs and major swings. You might be up 200% and you might go down 5%, 20% at the same time while you're holding that long-term trend. It's important that as you take the trade, you know how long you're going to be holding it. For me, I set aside a long-term portfolio where over 80% of my money's invested. That's where I put into the blue chip cryptos, my favorite picks for this cycle that I feel like are the most trustworthy, and I hold those regardless of what happens in the ups and downs. This creates a way for you guys to actually make profit by ignoring all of what's going to happen with the ups and downs in the market, and you're just holding that long-term trend because at the end of the day, none of it matters. More often than not, as the market progresses, you're going to continue to outperform and you're going to see your portfolio continue to grow. Yes, there's going to be ups and downs. And had you been, only focused on the short term with Bitcoin, you would have got chopped up throughout this entire accumulation. Now we look at Bitcoin and it's clear up here. And this is going to be the way it is for every altcoin. When we're below the all-time highs of a cycle, you really shouldn't even worry so much about taking a ton of profit. Really, what I would say is if you really want to get out of a position or at least just guarantee that you're safe for the long term, 100% gains in crypto really isn't that hard. And if you buy at the terminal end of a correction, specifically, if you buy at the bottom of a market cycle, to make 100% returns, which equals to double your money, really isn't even that hard. And so with that being said, one of the ways that I like to keep myself safe is I will take a trade, I'll target 100% gains, which is double my money. So let's say I take the trade with $1,000. The market goes up 100%. I now have $2,000. Now what I'll do is I'll sell half of it, aka I'll take my initial investment off the table, and then I'm just having an extra $1,000 that I just pretty much made out of thin air by trading the market. And then I'll keep that to ride long term. That's an example of letting your winners ride. You take the trade, you make 100% gains, you sell the initial investment, and at that point you can take that $1,000 and move it into Tether, you can move it into Bitcoin, maybe Chainlink, some other high cap crypto. And then you always have a guarantee that you've made profit. And now you also have $1,000 free in the market that you pretty much just created out of thin air. This is a way that I like to keep myself safe, because one of the things that people will do is they'll take a trade, they'll watch it go up, and they won't take any profits. And they really have no idea what to do in the first place because they didn't set a criteria for taking the trade. And then it ends up going all the way back down. And then they end up losing profit. They end up going below their initial entry. And then they end up selling at a loss because they're scared. This is something that happens often. And so what I can say, guys, to protect yourself from this is always remember to just sell at 100% gains. We're at the point of the cycle where it's really easy to hit those 100% gains. And if you know what to look for and you protect yourself, you're never actually going to be losing any money in the process. In fact, you're just going to be letting your winners ride, and that's just free money on the house, right? And so that's one of the ways that I actually like to manage my trades. Now, one of the ways that I'll also do it is if you're really focused on taking profits at the early point of a market cycle before we break all-time highs, because you guys got to remember that once Bitcoin actually hit this point after this impulse, it was a very long period of time before we ever got back to that point again. In fact, it was over about 500 days in which it took us to go all the way back down and then break from that same point again. And so there is going to be points in the cycle where it is good to take some profits. Pay yourself so that you can guarantee that you have those profits, because it's easy to lose it all back to the market. And so if you have a trading plan where you're going to hold long term, then none of the short-term price action even matters. You're just holding long term. And you have to make sure that you are aware of that, because if you don't have a clear criteria and you're just telling yourself, oh, maybe I'll hold long term, when the market starts going down, you're more often than not going to end up selling at a big discount because you just got out of your own trading plan and in your own way, right? Now, another way of which I'll do this is based off of Fibonacci. Now, normally with Fibonacci, you go from the low to the high, and that's how you're looking for bottoms to buy. In this case, if you're trading and looking to take profits from buying a market cycle, you do it opposite. You go from the high down to the low, and we can see that Bitcoin went straight up and tagged this 618 level. And that's the golden ratio, right, of all of Fibonacci. Every one of these Fibonacci levels are divisible by the 618, which was phi. I think that which is phi, and so that's important level to watch for. Anywhere from you'll see market cycles hit all of these different levels. Sometimes they'll only hit the 236 and then go down. Sometimes they'll come up and hit the 382 to the 618. Sometimes they go even higher than that. And so one of the ways that you'll just take profits based off of a market cycle is just to merely sell at these Fibonacci levels. And you know, nobody really knows how high it's going to go. A lot of people took profits at these lower levels for Bitcoin, and it just kept going up. And that's just simply the way it's going to be. And so if you're not looking to hold long term, sell based off of these Fib levels, because at the bottom of a cycle, oftentimes we get this dead cat bounce, and then that's a point where you can take some initial profits. Sometimes there's a correction back down that you can rebuy the dip, or sometimes it just ends up keep going up, which I'll share with you guys some examples of. So Ethereum was a prime example of a crypto that never had any type of pullbacks, and this is something to be aware of. This is why I keep a long-term portfolio that I don't touch. It's because sometimes the markets don't pull back and they just go parabolic, and you don't want to be taking all of your profits below the all-time highs, because it's after the all-time high breakout that we go into price discovery. And so you always want to make sure that you're preparing for that moment of time. You don't want to get out of your entire positions too early. You don't want to scale out of every one of these fibs, because let's say Bitcoin consolidated here and then just kept going up. You know, you would have missed out on an amazing opportunity to accumulate, and you would have already sold all of your positions. We don't know how these cycles are going to play out. We don't know if they're going to accumulate for a year. We don't know if they're just going to start going up. In the case of Ethereum, we accumulated sideways for 2 years. And that's what I try to tell people. The longer the accumulation, the greater the expansion. And that's exactly what we saw here. Bitcoin was starting to already uptrend. It went all the way up to 14K and then back down. So its cycle was different than Ethereum's. Whereas Ethereum chilled here in this trend, in this channel for like 2 years, 2.5 years. And then when it went up, it just went vertical. This is the way that some of these cycles are going to play out. And you just have to do your own due diligence. And if you don't know, simply prepare for both. Take a trade where you're going to sell in between the all-time highs and then take a trade where you're only going to hold it long term. That way you're always guaranteeing yourself that you have a position and it doesn't really matter which way it goes. You're going to be profiting for both. Now let's actually talk about some low cap positions that I recently took and talk about why I actually ended up taking those positions. Now the first one up on the list today is going to be Shroom Finance. I actually took this position back down in here at 11 cents. So 11 cents was about here. That's where I ended up taking this trade, and it's performed very, very well. And the reason I bought this trade was, simply put, it was the classic example of a market cycle. So I'm currently sitting up about 7x on this, still holding it because I really like this one. I think that we still have a little bit more upside to go. I don't think you guys should be buying these, just FYI. I'm just merely sharing with you guys how I traded this. Now, one of the things I looked for was the market cycle. Guys, I'm telling you, these market cycles are very obvious to see. Once you see one, it's pretty obvious to tell. We can see that once we ended up hitting this low point in the bottom, we had a ton of volume came in. Even though there wasn't a ton of volume throughout this period of time, this is your classic example of a market cycle, right? In a market cycle, you can use basic Elliott waves to dictate how a cycle should look. In this case, what I look for, and I use Elliott wave theory just for the fact of market cycles, you look for the 3 impulse waves. Wave 1, wave 3, wave 5, right? 3 impulse waves. There's always going to be 3 impulse waves to every cycle. And then what follows is an ABC correction. ABC. The best thing that you guys are going to be able to do for this cycle is look for these ABC corrections after 5 impulse waves and buy once it starts coming back down after about a full retrace, right? It can never go all the way below this one wave, otherwise it invalidates the Elliott wave count. So you always want to make sure it's making a higher high above wave 1. But keep in mind, it can retrace up to 99% of this wave. So technically it could come all the way back down to like here, and it would still count. That's just one of the volatility ways of how Elliott wave theory works in crypto. Now, that's the reason why I bought it, guys. I didn't buy it at the very bottom here. I didn't even see this trade until it was at this point here and it started to go back up again. I ended up buying the short-term top before this correction back down. But I saw that this was an obvious market cycle because this is where I bought right here. This is what I was looking at the time of taking the trade. And I said, wow, this just looks like your classic market cycle. And if we come over here, do you guys really see any difference between these two charts? I mean, you can see the exact same emotional psychology. That's why I always say, keep this chart in the back of your mind, whether it's saved as a screenshot in your computer, your phone, whatever it is. I can guarantee that you're going to find this pattern over and over and over again. And not just crypto. This is a pattern that repeats across every market. And this is why I like to stick to the long-term trend, is because I just look for this pattern. Simply put, I find this pattern and I trade this pattern and I make a lot of money off of this simple pattern. And that's all you guys really have to do. This is a basic strategy where you guys out there don't require a ton of TA knowledge, and you can find this pattern and trade it. You're not always going to be right, but when you find the low caps that are right, I mean, I'm up 7x off of this one alone. Now let's talk about another one on the list, and this is going to be Rari or Rarible. This is an NFT platform. And once again, I bought this for the exact same reason of Shroom. It just looks exactly the same as your typical market cycle graph, right? We have 1, 2, 3, 4, 5 impulse, A, B, C back down, fully retrace. We have this big rounded accumulation structure. And if we come over here, it's once again just the exact same chart here. No difference. And this is a pattern that I've traded to extreme consistency. Now, we took this trade inside of my Discord at $2.29. So that's about right here. And so we're currently sitting up about 15x. So this was another one of those key examples, guys. This was an NFT platform. It had the narrative. I knew NFTs were bullish, but most importantly, the only reason I took this trade was because of the chart. Market cycles, guys. You're going to find these market cycles over and over and over again. Some of them are going to look a little bit different than others. Shroom didn't retrace this much. This one accumulated sideways a lot longer, but it's still just your classic example of a market cycle. And you guys can look for these, you can trade these, and you can make some profits. Now, before we wrap up this video, let's talk about how to know when to take the profits in the first place. I gave you guys some basic strategies with the Fibonacci. I said that you guys can target the Fibonacci levels by going from the high down to the low and scaling out that way. That's for bigger picture market cycles, coins with a much higher market cap. Now, for the low cap stuff, it doesn't take, normally speaking, when these things start breaking out, you don't want to be selling below the all-time high. You want to be holding and exiting past the all-time high. And so a way that we do this is by taking the trend-based Fibonacci tool, and we go from the low, we go to the high, and then we go to the midway low point. So in this case, this low here. And then you just scale out based off of the 618. And the way that you guys would do this is you'd set up your settings and you'd actually input these yourself. So you'd put the 1618, you do the 2618, the 3618, the 4. This should be 618. And that's literally how I scale out. And the reason I use the 618 is because, like I stated at the beginning of the video, the 618, and specifically the 1.618, that is the golden ratio, right? All of the Fibonacci sequences, all of the numbers inside of the Fibonacci sequence, they all are divisible by the golden ratio, which is phi, 1.618, right? And so if you just simply use this exact equation inside of your Fibonacci, you just do 1618, 2618, 3618, 4618, and it perfectly maps out sell targets right here. And if we look at this, if we would have taken profits at the 1618, that was the short-term top here. If we would have taken profits at the 2618, that was pretty much this wick here. 3618, once again, this wick here. And I'm honestly expecting that we're going to go for one more high up to about this level. And at that point, that's probably when I'd be looking to sell. I would expect that we'd see some type of major correction here if we don't already start to see it right now. And so this is just a basic way to understand how to trade them, take profits. You don't have to overthink things. You don't have to know the exact price, because here's the thing, guys. I never know the exact price. I take profits off stuff that hits a 10, 12x, and then it goes up 20 more x, and I'm just sitting there like, well, sucks I didn't hold that long, but I took my profits, I made gains, and that's the thankfulness that you guys have to have. You don't worry about missing out on gains. You're going to miss out on gains all the time. You're never going to buy the exact bottom. You're never going to sell the exact top, and you should just get that out of your mindset entirely. Now, let's actually talk about Rarible one final time, because this is going to be one of those examples of a market that actually surpasses all of your Fibonacci targets, because that is also going to be something that happens, and you guys have to be prepared for that, and don't beat yourself up if that happens to you, because it will happen to you. So this is another example. In this case, we ended up hitting this 1618. That was about right here. We ended up coming just short of the 2618. But we can see here that these levels are pretty consistent, right? We're getting pretty close to each one of these levels when we actually start selling off. Even though I think we're going to go up much higher than now, I think that we might actually see this one surpass this 4618. Maybe it only goes to the 46 and then sells off. But you guys are going to find coins that end up just going way past all of this stuff, especially in the higher market cap coins. You know, that's just going to be the way it goes. Things are going to far surpass any of your expectations. And the best thing to do is understand that that's going to happen to you and accept that that is 100% okay. And encourage that. Encourage the fact that you're not going to nail the exact top or bottom. Encourage the fact that you're going to sell something too early and it's going to go up way higher than you ever would have thought, and it's going to piss you off. And just accept that right now, because if you accept that now, you're simply going to not even worry about it when it happens, and you're just going to be moving on to the next trade. Always forward thinking, never thinking in the past, never thinking the what ifs, because none of that stuff matters, guys. Just focus on making gains now, in the moment, every single day, and you will be far more profitable than the people that don't. Guys, this was a long video. I really went into the educational content here. Wanted to make sure that my followers were understanding of how I take trades, what I do with trades, you know, how I manage them, the things that I look for, the indicators that I use, and it really comes down to Fibonacci. And also, you know, a lot of this is just my own trial and error of doing this for 4.5 years every single day. You know, I've made tons of mistakes. I've lost tons of money. I've missed out on huge gains. And I'm really just taking all of those lessons and applying it to this cycle in the best way for me to be profitable. Now, there's a lot that goes into taking profits. There's a lot I couldn't even cover. And so if you guys do want to get a little bit more of the one-on-one experience, inside of my Discord, I offer 2 different groups. I offer the video course, which is going to be 20 educational videos that teach you guys technical analysis. All of this stuff that I've been doing, the drawing on charts, learning my exact skills and strategies, that's where you're going to be able to find it inside of my 20-part video series. Now, on top of that, I also offer the signals. The signals are going to be the way for you guys to just simply come in and copy all the trades that I take, follow each and every one of my investments. I have 2 different portfolios, one where 20% of my money is and one where 80% of my money is. One's for long-term, one's for short-term. You guys are going to get access to all of that stuff, see all the trades that I'm doing, where I'm moving my money to, how I'm taking profits. And let me just say, guys, all of these coins I've been talking about on the videos that you see up over 10x, They were all signaled inside of my Discord. I don't get to talk about them a lot on here because I post them all in the Discord first. And so if you guys want to get access to that stuff before I ever talk about it on YouTube, make these same gains with me, the Discord server is going to be the place. The signals are going to be the place for you. Now, you guys can purchase them together or separate. If you can only pick one, I always recommend going with the signals first because obviously you guys want to make those gains, and that's where I post all of my trades. So with all that being said, guys, check the stuff out. You guys can also download my free ebook. That's free, not going to cost you anything, but I put a lot of information that's going to help you out tremendously. Go check out the stuff. Join the Discord. It's free as well. Go check out the paid group if you really want to get some one-on-one with me. Ask me questions. Message me privately. And with all that being said, guys, thank you all so much for the support. I'll catch you guys in the next one. As always, peace out.